financial regulatory reform, in your opinion, Simon, what's it missing?
Well, the reforms right now being discussed on Capitol Hill are missing everything, pretty much.
Everything?
Pretty much everything. The consumer protection piece is in there, but it's getting weakened. I think,
watered down by the day.
By the hour, as we speak. The issues of system stability are not being addressed at all. There's no attempt to rein in the power of the biggest banks. There's no serious attempt to increase the capital that they have to hold, to buffer themselves against losses.
But their Tier 1 capital ratios have increased. I mean, from the depths of the crisis, if you will. They're holding more money.
They are. The Tier 1 capital, of course, of Lehman Brothers, the day before it failed,
sure.
as revealed, as stated in their own conference call, was about 12%. Mm-hmm. And most of our banks have moved up towards 12%. And the government's, Obama administration's recommendation for capital you should hold going forward is 12%. So that's not a lot of progress.
I see your point. Talking about a cross-border authority, and you've written extensively about this, saying regulatory reform really isn't anything if you can't have cross-border authority. How can you really achieve that? You say not this month, not this year, but we're heading that way?
It's going to be very hard to find a way to deal with the failure of a large cross-border financial institution unless you have an international agreement. The week after Lehman failed, there was a big fight between the US regulator and the UK regulator. Exactly. They couldn't decide who got which bits that were still worth some money
sure.
in order to pay off the people who had claims on the bank. This is a huge problem. It's a much more general problem. Now, Richard Fisher, who's head of the Dallas Fed, came out today and said we should be breaking up our banks on an international basis, international agreement. I'm not opposed to that, but good luck getting that agreement. Mm-hmm. And he also said, it's very important, if you can't bring countries with you right now, you should do it yourself. The U.S. should act unilaterally in this regard.
How does the U.S. do that, given the nature of banking institutions across the globe now? They just aren't American banks.
Well, it's actually quite straightforward. What we need to do, we have a law on the books, the Regal-Neal Act of 1994, mm-hmm. That set a size cap on our banks. No bank can have more than 10% of total retail deposits. Mm-hmm. Problem is, the big expansion of banking was not about retail deposits, and also those rules weren't enforced because our regulators have gone completely wimpy. So what you need to do is redefine the rule, say that none of our banks will be bigger than a certain percentage of GDP. Mm-hmm. This would affect, a reasonable proposal in this regard would affect precisely 6 banks. Make our biggest 6 banks somewhat smaller, push them back to where they were in the early 1990s, when our banking system was very competitive, mm-hmm. strong, and there was nothing wrong with the flow of money around our economy at that point.
What does that do for the competitiveness, though, of banks in the United States? Because that's indeed the argument that you will hear from the bankers.
Yes, I understand. It's not in their interest to support this. They'll push back with everything they've got. Look, the U.S. is based on free and fair markets. We don't have free and fair markets right now. The big guys are so big, they
don't have free and fair markets.
Of course not. We have too big to fail institutions borrow cheaper in the financial markets than anybody else mm-hmm. because there is an implicit government subsidy. Mm-hmm. Implicit government subsidies, the expectation that if Goldman or Citi or JP Morgan Chase were to fail, they'd be bailed out. That gives them an unfair advantage. That's not free and fair markets. That's a complete distortion, and it should be stopped.
The Volcker rule. You don't support it. You say it's not going to work. Why? Isn't it a step in the right direction, or the direction that you seem to support?
The idea behind the Volcker rule, the Volcker principles, let's call them, are very sound, which is you should force banks to become boring, and if there are entities that want to be exciting, they should become very small and they should carry a lot of capital. That's a good principle. But as designed and proposed by this administration, it's become completely watered down. They're going to break off proprietary trading desks. That's not going to really affect the core issue.
Well, there are a number of bankers that I spoke to recently that agreed with that, saying the prop desk issue isn't central. But the Volcker principles you agree with, as he's had them for years.
Yes, and so I'm saying let's do Volcker Plus. That's my point on Capitol Hill, which is take those ideas that Chairman Volcker has advanced and really make them work. They also propose a size cap, by the way. Mm-hmm. But a size cap going forward, you can't get bigger. Why would you think that today's banks are the right size, given all we've been through? Sure. They're too big already. Make them smaller.